I'm Greg Hunter. Welcome to USAWatchdog.com. With us, a regular guest. I can tell when I need to have him back on. People start asking for him. Really, no kidding, I kid you not. On USAWatchdog.com and on the YouTube channel that supports USAWatchdog.com. We're talking about the man who runs Kirby Analytics, Rob Kirby. Rob Kirby, thank you for joining us today from Canada.
Pleasure to be with you, Greg.
Fed statement. I got to tell you that at one point I was watching CNBC and Rick Santelli, and he had, I don't know, in the windows, the boxes they have, Steve Leisman, who is a huge Fed apologist for anybody that doesn't know. Huge. He just loves the Fed. And Santelli he says, what did she say? Do you know what she said? And even Leisman said, I don't know what she said. He didn't understand what she said. What in the heck was the Fed chairman? Well, why did they not raise rates? I know you have a different take on this deal. Why did they not raise rates this time? Is it simply because the economy is bad?
Well, the economy is bad, yes, Greg, but the economy has been bad all along. And the token rate raise that we got in December certainly wasn't because the economy was exhibiting any strength. The token rate raise we did get laid the groundwork for the Fed to conduct open market operations called reverses, where they inject reserves or collateral back into the system. And the reason that the reserves of collateral had to be injected back into the system is because foreigners were selling U.S. government securities, and an arm of the U.S. Treasury, a very secretive arm that we've talked about many times, called the Exchange Stabilization Fund, they were buying these securities with off-book dollars. And when they buy these securities with off-book dollars, the securities then go into off-book accounts, and they're not available to be recirculated in the system because they're required as collateral in the interest rate swap mechanism, which is used to keep rates, long-term rates, low. So this was a complete distraction and a complete ruse when the Fed raised rates in December. And it was only so that they could re-inject more collateral back into the system to support ongoing interest rate manipulation. Funny how the word manipulation keeps coming up. And I stated when they did it that it would be a one-and-done thing because they had no business raising rates in the first place because the economy was not exhibiting enough strength to warrant any rate raises whatsoever. And there won't be any more interest rate raises because the economy continues to roll over, and doctored economic data cannot make the sick pig that the global economy really is look any better. It doesn't matter how much lipstick you put on a dying pig. It's still a dying pig.
And fast forward to this latest meeting where even the shills on CNBC, well, I should say one, Santelli's not a shill, but Leisman, who is a Fed, I mean, he's a pro-Fed guy. You can't get around that. And that's not even that's just an accurate description of what he is. And even he doesn't understand what they're doing. What's going on? Why did they not raise rates? Just because it is so sick that they were afraid of another month like January in the stock market?
Oh, exactly. And I mean, and that's the reality is, Greg, that's probably what should be happening in the stock market. But we know that the stock market is manipulated, just like we know that LIBOR was manipulated, just like precious metals are manipulated. Their prices are suppressed, and this whole thing about suppression, Greg, I really want to bring up to you as it pertains to precious metals, because there's some revelations that are going to be coming regarding precious metals suppression, precious metals price suppression, which is going to make the deniers that this has been occurring look very silly, and this is going to occur in the very, very near future. And I'm going to say to you something that related to the revelations that are coming. I'd like everyone to please understand that foreign institutions, as in non-American institutions, are not necessarily governed by the same set of rules that American institutions operate under. And what I'm referring to here is that American banking institutions and American public companies, if granted a waiver by certain arms of the U.S. government, do not have to report their true financial condition and can in fact lie to regulators. They can misrepresent what they're doing in markets, and I'd like everyone to remember that, because those laws have been on the books in America where these privileges can be granted, and they've been on the books in America since 1934. Foreign institutions, on the other hand, are subject to different regulatory regimes where such privileges aren't granted, and these institutions have to act in accordance with international law, which is a little more stringent than the souped-up under the allegiance of national security that American institutions can and do operate. So I'd like everyone to remember this. And as I mentioned, with revelations that are due and are coming regarding price suppression in the precious metals arena, the reaction to this I expect to be likely a very, very strong pop in the price of precious metals. I mean, if you want to think about it, we know that LIBOR was manipulated because there are people that have admitted to it and they've paid fines.
They got convicted of it. They got convicted.
Exactly.
The banks got convicted. Six big banks got convicted.
Think about this, Greg. When you get caught, or when it's exposed that there's a manipulation in LIBOR, what do you really do to react to it? Do you borrow more? Do you lend more? I mean, the same thing when we know that the stock market is manipulated. Are you inclined to want to sell your stocks? Or are you more inclined to want to buy the stocks and play the manipulation along with the guys doing the manipulation?
And the same thing with the Forex market. They were convicted as well. They admitted this is a fact.
Okay.
This isn't a fantasy. They rigged the Forex market.
I want to postulate this. If, as and when revelations are made that it is irrefutably a fact that the precious metals markets have been suppressed in the paper arena, what do you think people are going to do?
Buy.
They're going to buy physical metal, because they're going to know that holding physical metal is one way to avoid being manipulated, and they're going to intuitively know and explicitly know that real physical metal has been held back and is underpriced. This should create, in my view, a very, very strong round of buying in physical precious metal, which should push prices dramatically higher.
Yeah, you work in the tonnage area. What's going on behind the scenes where people say, "Give me 5 tons of gold," or 10 tons of gold, or whatever? What's going on behind the scenes in the tonnage area?
Well, in the physical tonnage area, I can tell you supplies are tight. But in the paper tonnage area, as in if you're GLD, the ETF, the biggest ETF for gold, which they claim is all backed by physical, they seem to be able to add 150 tons in a matter of weeks anytime they want to. But 150 tons of paper, I don't really believe there's 150 tons of physical to be had in the open market.
For the entire world.
Maybe a little bit different if you're dealing with sovereigns or people who claim to have it, who can sort of write a check for it in one go. But I mean, I question America's sovereign gold reserve, because there's been no proper audit done on it since 1953. As I question other sovereigns, Germany claims to have a very, very vast amount of tonnage of gold as well, but an awful lot of German gold is held in custody in America by the Fed. And when Germans asked for their gold back, they were told they can't have it. So, you got to question whether the Germans really have the gold that they claim, because America's holding a bunch of it for them, but they're not allowed to audit it or see it or have it. And you have to question, how much gold the Italians have, because they're alleged to be another huge gold holder. But we all know that, we all should know, because the information is available in the public domain, that Mr. Draghi, as finance minister of Italy, pulled some fast and furious moves with the Italian sovereign gold reserve back in the late 90s prior to Italy's inclusion in the euro under the Maastricht Treaty. So, the sovereigns who claim to have gold, you got to question just how much of it they really do have, and whether the stocks are what they're purported to be.
What do you make of this last week when the Fed made this goofy announcement where we're going to have 4 interest rate rises and now just 2? And I went, ha ha ha! I looked over and told my wife, they're going to have any. I think that's what you're thinking. You're thinking they're not going to have any. You think the next move is not going to be a rise? Could it be a cut?
I think the next move coming from the Fed realistically is going to be an announcement. Whether they choose to call it quantitative easing, it's going to amount to that because it will take the form of liquidity injections back into the system. For the people who are fans of and enjoy the helicopter money, your prayers are going to be answered, I do believe, in short order. Because the funny thing, Greg, is that for the years that I've been following the Fed, which is an awful lot of years, Janet Yellen historically has been known as the most dovish person that ever sat on a Fed board, and here it is after she gained the chairmanship of the Federal Reserve, they tried to for some reason cast her as some sort of a hawk. And, this is just not in her history. It's not in her makeup. And it's not what she's ever been known to do. And lo and behold, here she is as the Fed chair. And really, she talks sort of one side of her mouth about rate rises. But, really, she's, acting true to form. She's a dove.
And you think the next move is going to be some cut, some QE, because the economy, you said in the last time that the first quarter, maybe the second quarter, the whole economy is going to start rolling over. Apparently, the Fed agrees with you because they can't raise rates.
Absolutely. And I do believe that you're going to see this. I think you're going to see this rollover accelerate as the year progresses, even though most of Wall Street keeps trying to sell everybody the happy juice that everything's getting better every day. The reality is things aren't getting better. You see, the data that the Fed spews, on a weekly basis, Greg, doesn't jive or match up with the likes of John Williams, who I know is well known to this program. John Williams deconstructs Fed lies and benchmarks what's going on to historic norms, and by historic norms, inflation is much higher than the Fed reports. Unemployment rates are much higher than what the Fed or the Treasury reports. GDP is much lower because we're using skewed and improper inflation numbers or deflators to adjust real GDP. So we're being fed a soup of lies. And the problem is when you lie for too long, Greg, you end up getting exposed for what you really are, and that's a liar.
And you think the suppression game, it's already kind of ended for LIBOR. That's pretty much been known to be rigged, and the Forex market, which I can't imagine if they rigged Forex, they had to rig gold and silver. But you're saying the suppression game for gold and silver is about to come to a screeching halt in the next, month, 2 months? What's the time frame?
I'm not even necessarily saying it comes to a screeching halt, but what I'm saying, Greg, is that the irrefutable revelations that it has occurred and has been occurring is going to create a torrent of buying of physical metal. And as the tinfoil hat-wearing people that I've been affiliated with for so many years, the Bill Murphys and the Chris Powells of the world at GATA, have long maintained that the price manipulation in precious metals would be defeated by demand for physical precious metal toppling the repressive price manipulation in the paper markets. And I think we are now finally at a point where it's very likely we're going to see just that. And the people who called the GATA people tinfoil hat wearers for many years are ultimately going to be the sad sack looking clowns. and there's many in the mainstream press that are gonna have to put their polka dot suits on and suck it up, because you know what? These tinfoil hat wearing guys at GATA have been right all along, and they're going to be proven to be right in spades in the very near future.
Well, and just one more thing, because I have a lot of respect for GATA. They came out with data. They came out with studies. They didn't just say, we think it's manipulated. They had lots of data, lots of studies, lots of information to prove their case. Everybody went, you're nutty. Here's let's fold you a little hat, put it on your head. But so they and now the metal's going to hit the road, so to speak. The rubber's going to hit the road, where the buying torrent, you're saying, is going to overwhelm the markets, overwhelm the manipulation.
The buying of physical metal will overwhelm the manipulation. Yes, that's how it ends.
And the last week after the Fed share was weird. Going into this 16th, going into the 16th, you had this little, down these hit jobs. Let's just call it manipulation. And then I think they knew that they were going to not raise rates. They have to. They had to know that. They're going to know the economy's bad. And then we have this big pop, 3% in a day, $30, and then we have the little fall through there. What do you make of that big pop right after Janet Yellen and going into it? Is that just manipulation, and then it got overwhelmed, or what do you make of that little rise in gold?
Well, I mean, they listen. Regulators in their ongoing suppression of precious metals, they've been well documented to push the paper price down in front of favorable. When I say favorable for the gold price, as in bullish for the gold price. Time after time. Well documented that they'll push the paper price down before a piece of bullish news for gold is released, and that way, when the ensuing inevitable rally is then capped, in its tracks. And this is a pattern that's been repeated over and over and over again, Greg, over the years, to the point where it plays like a broken record. And the deniers of the suppression are as fervent as the people who are anti-Trump, and they will go to any length, and they do conspire to make anybody who says anything is amiss in our financial universe. They immediately label them conspiracy theorists. They immediately start using statements like, oh, you must chase UFOs, you must believe in UFOs, anything to belittle, diminish, or mar anybody who's trying to talk about anything like reality. And I mean, it's the same sad act, unfortunately, that we see with the media treatment by the mainstream in America towards Donald Trump. And let me tell you one thing: I'm neither Republican nor Democrat nor liberal nor anything. If anything, I would say my views tend to be conform probably closest to the libertarian movement. But I don't have a horse in the race at all. I mean, I report what I see. I report what's in front of me, and what I see in front of me is not pretty. And what I know is coming is going to muddy the picture for a lot of people. Not so much for the gold bugs who have long maintained and have stuck to their guns, knowing that one day the physical market would trump the paper selling. Trump, isn't that a great word? I think the world's going to be getting a lot more trumped in the very near future.
You're an expert. I don't know if people know this, but I've said this before, but I'll say you're an expert. Expert on a pioneer in derivatives. You know all about derivatives. Could this be just a bigger picture when you say muddy the waters? It's not just a gold and silver deal. It's the collateral, the bonds. Hey, we're using these bonds as collateral, and if the collateral's no good, then you're going to have to find another collateral, right? And isn't that where gold and silver come in? I mean, aren't these bonds going to be massively depreciated at the very least, if not destroyed?
Well, listen, Greg, if you look at it from 30,000 feet, the rise of precious metals is really nothing but an expression of the failure of fiat money, and the lead dog in the fiat money race is the U.S. dollar. And we are watching fiat money fail in front of our eyes. And, this is what has given rise. You see, it's the poor stewardship of the world's reserve currency on the part of American financial elites, which has led to this overwhelming demand for physical precious metal, because, the whole world's caught on to the game that the guys managing the world's reserve currency have done such a poor job, and they've printed way too much money, and they've issued way too many bonds, and they know that effectively America is insolvent. And, this is why countries have been trying to, or countries that are wise, like the Chinese and like the Russians, have been trying to diversify their foreign reserve holdings out of U.S. government securities and U.S. dollars and into precious metal, because they know that if they hold on to their dollars and their U.S. government securities long enough, they are going to turn to tapioca. And that is coming, and I can't tell you the exact day it all happens, but that will come.
And you think Janet Yellen is going to turn the fire hoses on? I mean, we're going to see some big bad days in the stock market. Everybody's going to tell her to do something, and she is. And you're saying that that's when gold has a major liftoff.
Well, I mean,
you have to do something overtly, not covertly.
We may be seeing the thin edge of the wedge of that right now. We may or may not be. But you know what? Rest assured, it is coming, and it's coming in a very, very major way. And just to reiterate your words regarding Yellen having no choice but to add money or turn the fire hoses on, I think those are very accurate words. She's gonna literally be boxed into a corner where she has no choice but to print more money and inject a lot more.
Or let the economy fail in an election year. And she's a big Democrat, so either she'll have to print money or let the economy fail for the Democrats and make President Obama, who says the economy's strong. Anybody who's saying it's not, in his quote is peddling fiction. Peddling fiction if you think the economy is bad. Well, you're saying that she'll have to protect the president and the Democrats at all costs.
With all due respect, with regards to President Obama saying people are peddling fiction, it's Mr. Obama who did say if you have a business, you didn't build that. And if I recall, Mr. Obama also said with regards to his Obamacare, if you have a doctor, you'll be able to keep your doctor, and
it'll be cheaper,
and your health care premiums will be going down. So Mr. Obama, in terms of his pronouncements, doesn't really have a very good track record in being truthful or accurate himself.
But you think that that's going to be the seminal moment when they have to come out, and I don't know if they even make an announcement. They'll just start doing it, and they'll do it over. I mean, things will get so bad where it won't be covert like with the Exchange Stabilization Fund, or maybe it'll be both. But there'll have to be an overt side to this. Hey, we're cutting interest rates and buying bonds. They're going to have to do something like what Draghi just did, right?
That's what my belief is, Greg, completely.
So it's going to be an overt. Things are going to get so bad that overtly they're going to show people they're doing something in an election.
It's going to be helicopter money on steroids, Greg.
You think it's this year?
Yes, it's coming.
Because we're close to the edge.
Greg, my belief is that it's already been occurring, but it's been occurring by stealth. As I've said to you in previous interviews. It's my belief that the Exchange Stabilization Fund is effectively performing that function right now, except they've been doing it with off-book dollars, and by doing it with off-book dollars, they've been able to more or less sterilize. You see, there has undoubtedly been, and empirically and documentably been, foreign selling of U.S. government securities, and roughly $1 trillion in the last year. Well, ask yourself, Greg, who bought them? And why is it when foreigners are selling $1 trillion worth of U.S. government securities, interest rates are going down?
They're going up.
The 10-year bond, Greg, 8 or 9 months ago was at 230. Now it's at 180. So how is it with foreigners selling bonds, rates are going down? Why is the dollar strong, Greg? Dollars don't get strong when foreigners are selling them. Dollars get weaker. But you know what? Our reality is that, we're told that the dollar's strong, yet foreigners are selling it, and interest rates go down. But so riddle me this. Who bought all those bonds? Do you think the U.S. investment banks bought all those bonds? Well, maybe they were part of the conduit for the ESF to buy them, because most of the global bond trade goes through 4 or 5 big U.S. investment banks bond desk. So you see, the U.S. investment banks, like the J.P. Morgans, the Goldmans, the Citis, and the Morgan Stanleys, and the B of A's, they're all in on the game. You see, and this is why, Greg, these institutions can maintain 50 up to $75 trillion derivatives books without ever getting caught wrong-sided, because they know the direction of U.S. monetary policy, and I mean, if they didn't know the direction, and if they got caught off-sided on any of these major interest rate moves, like these guys would be wiped out in a minute. Like, think about what a 1% move in the value, or a 1% adjustment in the value on $70 trillion is.
Yeah, $700 billion.
I mean, it's scary. Because you look at banks like J.P. Morgan Chase. What's their market capitalization? What is it? 300 billion, roughly? I don't know. It's somewhere around there. And I mean, a 1% move on a $70 trillion book is $700 billion. It would wipe out their capital 2 times over, and that's in a bad day.
And this is
But Greg, you got to ask yourself, why is it they never get wrong-footed?
Criminal code.
Because they're fishing. It's sort of like asking a fisherman who catches a fish every day without fail at 10 to 12. But and he doesn't tell you where he goes fishing. Well, if you're fishing in a barrel with a dip net, you don't really have to be a great fisherman, because you know where the fish are. You just have to take your dip net and you just have to dip it in and take a fish. Well, you know what? I'll tell you something. When you got a $70 trillion derivatives book and all this crap about how derivatives books are all hedged, hedges are dynamic. You see, and I know this from being a broker of these products. Hedges are dynamic, and the value of hedges move with markets. And in a fast market, your hedges can change value dramatically and in very short order. These guys never get caught wrong-footed. So they're either being excused from proper accounting, which is likely too, or they know the direction that everything's going before it ever goes there. And
then the question people are asking right now is, why can't they do this, going on forever? I asked Michael Pinto this. He says, well, you can do it until your currency collapses.
Yeah. Well,
how can they? Why can't this go on forever?
Yeah,
people have that idea that they can.
And the reason, and Michael Pinto is correct, because people lose faith in your currency, because people start to sell your government securities. Isn't that strange, Greg? Just like what China and Russia have been doing. Okay, and except wait till another 6 or 8 or 10 or 12 countries join in the game, and wait till the rush for physical precious metal overwhelms the paper supply, and they can't deliver physical. Then they got a huge problem on their hand, much bigger than the one that they've had in the recent past.
Well, I know you do a lot of inside work for people. I know you are doing a lot of stuff, and you have your Kirby Analytics for folks. Tell me, what do you get with Kirby Analytics? You get this, but you get a daily or a weekly or whatever you write. You get it all the time. Tell me about Kirby Analytics.
Yeah, well, Kirby Analytics has been around for quite a while, over 10 years now, and I used to do a lot of writing publicly, Greg, but lately, in the last year and a bit, I don't write publicly anymore, and the writing that I do, I just distribute direct with my subscribers by direct.
Wow, that's a deal. I used to read your stuff. You put together great stuff.
Yep. So anyway, and you can find me on the web at kirbyanalytics.com.
And what's a subscription cost for 6 months?
$145 a year.
$145 a year, and you're constantly you have email contact with your subscribers.
Yep.
That's fantastic. Rob Kirby, KirbyAnalytics.com. I'll put up the on the USA. For you guys watching on YouTube, go up to the right through and you'll see the USA Watchdog. You'll scroll down to after the interview. I'll put links to Kirby Analytics. There is some free information on there as well as the sign-up page. Rob Kirby, Kirby Analytics, thank you. You will come back when things start breaking, right?
Absolutely, Greg.
Rob Kirby, Kirby Analytics, thank you so much for joining us today on USA Watchdog.com.
Be good.